Hello everyone, welcome back to my channel. In this video, we are going to understand the complete foundation of the topic on payment lifecycle. So when we make a payment, it looks very simple. We enter the beneficiary details, we type the amount, click the pay button, and after a few seconds, we receive a message saying the payment was successful. But behind that simple action, several systems, banks, payment networks, and control functions are involved. So a payment, does not simply move from one account to another. It passes through multiple stages. So the stages basically include payment, your payment data, beneficiary information, validation, compliance check, payment routing, exchange, settlement, and so on. Before we move further, let us take a simple example. So suppose a customer wants to transfer 10,000 rupees to a supplier. So the bank must first understand who is making the payment, who will receive the payment, is the account active, does the customer have enough balance, is the beneficiary information valid, uh, has the which payment network should be used, and so on. So the that's why we call it as one payment but many controls, because there are so many steps involved when one payment basically flow from the starting to the end. Basically, a control is simply a check or rule that reduces the possibility of errors, fraud, financial loss, or regulatory violation. Uh, so, if you see on the slide, the life cycle shown here contains 12 major stages. It starts with initiation, followed by validation, enrichment, screening, routing, creating messages, transmitting the message, clearing and settlement, posting, confirmation, reconciliation, and resolving the exception handling and investigations. So this is a foundational level representation in a real bank. Some stages may happen in parallel, some may be repeated, and the exact order may change depending on the payment type, country, currency, and payment network. However, these 12 stages give us a very strong framework for understanding almost any payment process. With that, let us now examine each stage in detail. So the first stage is initiation. The first stage of the payment lifecycle is initiation. So initiation basically means that someone or some system creates a request to make a payment. The payment may be initiated by a customer using a mobile banking app, a customer using internet banking, a bank employee at a branch, a corporate customer uploading a payment file, an organization sending instruction through an API, scheduled standing instructions, another internal banking systems, and so on. So the input at this particular stage is a customer or system request. Uh, Let me again repeat that example, where the customer was requesting the bank to transfer 10,000 rupees to a supplier. So it's a request from the customer to initiate a payment action. What action is taken in this stage? So the system captures important information such as your payment amount, a currency, the beneficiary name, the beneficiary account number, beneficiary bank details, payment date, the purpose of the payment, customer account to be debited, and so on. And the output is a properly created payment instructions. So a payment instruction is nothing but the bank's structured record of what the customer has requested. So at this stage, the bank has not necessarily approved or sent the payment. It has only captured the instruction from the customer. For example, suppose a customer enters the following. A customer enters the details like amount. The customer has entered amount 10,000. Beneficiary name. Beneficiary name. Say ABC supplies. Beneficiary account number 3081. Let us take some random number. Then the payment purpose, invoice, payment, so and so on. So these details are basically filled on the application, on the system, either the customer doing himself or herself, or at the branch. So after the customer confirms the transaction, the system will create a payment instruction. So after the customer gives all this information, the banking system will create a payment instruction. So at this particular stage of initiation, as a BA, you must understand which fields are mandatory, which fields are optional, what information is required for each payment type. Are the rules different from mobile banking, branch banking, and corporate files? Which charges should be displayed on the application? Is customer approval or consent required? And so on. Therefore, in a nutshell, stage 1 converts a general customer or system request into a structured payment instruction. So after the payment instruction is created, it moves to the second stage, that is a validation. Validation means checking whether the payment instruction is complete, correctly formatted, and acceptable for processing. The purpose of validation is basically to identify the basic problems as early as possible. The input that is provided in this particular stage is a raw payment instruction created during the initiation stage. So it is called a raw payment instruction because it contains the information entered by the customer or received from another system, but it has not yet passed all the bank's checks. The action performed are the bank may perform several validations. For first, it may check whether all mandatory information has been provided or not. For example, whether the beneficiary account is present or not, is the payment amount present or not, is the currency selected or not, is the payment date valid or not, right? Second, it will check the account status, whether the customer account is active or not, whether the account is blocked, whether the account is closed, or are any debit transaction allowed on the account. Third, it may check the format of the information. A format check basically verifies whether information follows the required structure. For example, does the account number contain the correct number of digits? Is the bank code in the expected format? Is the currency represented using a valid code? For example, INR is our currency code, but if someone enters IN, that's invalid. The system may also check available balance, transaction limits, valid payment date, supported currency, customer permission, so on. The output is either accepted for further processing or rejected early. So rejecting an invalid payment early basically prevents unnecessary processing in the later systems. Suppose the customer enters payment amount but does not provide a beneficiary account number. So the system may display an error such as beneficiary account number is required. Similarly, suppose the customer wants to send 10,000 rupees but has only 7,000 available in his account. The payment may fail because of insufficient balance. Right? In this particular stage of payment validation, as a BA, you should define the validation rules. You should define the validation rules. You should be able to define the error messages, the retry options, the approval requirements, account eligibility rules, limit rules, and MakerSeeker workflow. Okay, before I go to the next stage, let me just quickly tell you what MakerSeeker workflow basically means. What MakerSeeker basically means. So MakerSeeker means that one person creates the payment, another authorized person approves it. For example, in company, an accounts employee creates a supply payment, but a finance manager has to review and approve it. So the first person is the maker, and the approving person is the checker. So this is basically implemented, or this control is implemented to help prevent the mistakes and unauthorized payments. So in nutshell, the stage 2 converts a raw payment instruction into either an accepted instruction or an early rejection. So once the instruction passes through validation, it moves to the enrichment stage. So enrichment basically means adding information that was not directly entered by the customer but is required by the downstream system for identification. So a downstream system is a system that receives and processes the payment later in the life cycle. So you must be quite well aware about the upstream system and downstream system. Let me just quickly give you an example. So when you are working on any application, your application is consuming data from somewhere. So that somewhere is your upstream system. And whatever data you are sending to somewhere, that somewhere is a downstream system. So that's what we call it, upstream and downstream. Okay, in this particular stage of enrichment, the input is a validated instruction. which we get it from the stage 2. So it has already passed the initial check. Initial check means but it may still require the additional technical or operational details. So what action performed? The system may add big code, branch information, charge information, settlement accounts, purpose code, reference IDs, transaction IDs, correspondent bank details, country or currency information, and so on. Let me just give you an example. Suppose the customer provides an Indian bank account and IFSC code. The customer may not know the bank's international big code or an internal branch identifier. So using a lookup table or master data service, the bank system may identify and add the required bank details. And that process of adding bank details is your enrichment, and that is what it is done in this particular stage. Okay, before we move on, so you must understand the difference between validation and enrichment. So when I say validation basically asks, is the information provided correct and acceptable? Whereas in enrichment, it asks what additional information must the system add so that the payment can continue. And as an output, you get the payment with all the complete details that is required for the downstream system to consume or to process further. In short, the stage 3 basically converts a validated instruction into a payment that contains the complete information required by the downstream systems. Okay, the next stage is your screening or checking. Screening and checks. So at this stage, the bank determines whether the payment creates any compliance, fraud, financial or operational risk. The input in this test, the input is the enriched payment that contains the customer information, beneficiary information, bank details, amount and payment purpose information. With that information received by the system, what it does is it performs the following check. It performs sanction screening, AML checks, fraud checks, limit checks, duplicate checks, and so on. So you might be wondering what is sanction screening. So sanctions are basically legal restrictions which are placed on certain individuals, organizations, banks, countries, vessels, or activities. For example, during your Ukraine-Russian war, there were multiple sanctions applied on Russia, that Russia will not be able to use the SWIFT network and so on. So that is sanction. The bank compares payment information against applicable sanction list. If the beneficiary's name or country closely matches a sanctioned person, organization, or country, the payment may be held for review. And this sanction lists are prepared by multiple organizations, and even every country basically prepares a kind of sanction list. AML checks. AML basically stands for anti-money laundering. AML checks help the bank identify whether money may be connected to any criminal activity or whether someone is attempting to hide the original funds. For example, an unusually large payment that does not match the customer's normal behavior may require investigation. Then your fraud check. Fraud checks determine whether the transaction may be unauthorized or deceptive. For example, a payment is initiated from an unusual device, or the customer suddenly transfer money to a new beneficiary. Then another fraud example could be several high-value payments are attempted within a few minutes. Okay, limit check. Limit check is basically a limit is the maximum amount or number of transactions permitted. The system may check daily customer limit, per transaction customer limit, account limit, country limit, bank limit, channel limit. For example, in our context, you can send a maximum of 1 lakh rupees through UPI in one single day. So that is a limit. Okay, duplicate check. Duplicate check basically determines whether the same payment has accidentally been submitted more than once. For example, the system may compare the amount, the beneficiary, date, customer reference, etc. Okay, velocity. Velocity means the number or frequency of transactions within a particular period. For example, 20 payments to a newly added beneficiary within 5 minutes may be unusual. Okay, what output do we get from this screening? So based on this screening or on this checks, the payment may be declared as clear, or may be put on hold, or may be rejected, or even the payment may be sent for investigation. So a hold basically means the payment is temporarily stopped until someone reviews it. In this particular stage is concerned, the business analyst should understand which checks apply to each payment type, what information is screened, what creates an alert, what decision codes are used, who reviews the alert, what is the required SLA, what evidence must be recorded. So these are some few points that you must basically understand, or basically be taking care of in this particular stage. In short, stage 4 converts the enriched payment into one of four possible outcomes, whether payment is cleared, put on hold, rejected, or sent for investigation. So once the payment passes through this required checks, the system decides how it should be sent. And that stage is called routing. Routing basically means routing is basically means it's a path. So through which path you will send the message. It's similar to choosing the best road for a journey. So the destination may be fixed, but there may be multiple ways to reach it. Okay. Uh, for this particular stage, the input is a cleared payment. The payment has to be cleared after all the checks have been done. Then what action will be taken? The payment engine may select the payment rail, the clearing system, the corresponding bank, the branch, the processing branch, payment queue, processing priority, message type. So okay, the payment rail. When we say payment rail, it's basically the infrastructure or network used to move payment instructions, and depending on the system, settle funds. So payment. When we say payment rail, it could be some examples of payment rail could be your RTGS. RTGS is one payment rail. HEH, automated clearing house, is one payment rail. Then card, then your UPI could be one payment rail, uh, and so on. Okay, Swift also could be your one payment rail. Okay, now how? So when we say routing or the payment is sent through, so there are multiple decisions involved actually. The system that routes uh, may consider the payment amount, the currency, the destination country, the beneficiary bank, urgency of the payment, the cost involved, the cutoff time, network availability, regulatory rules, customer preference, bank membership in the clearing system. For example, suppose a customer makes an urgent high value domestic payment. The routing engine may select RTGS. Okay. For a group of lower value, non urgent payments, the routing engine may select SEH, automatic clearing house. So these are some simplified examples for understanding. So actual routing rules depend on multiple factors. For example, I said country, scheme, and bank configuration. Um, and during this particular stage, you should document, the routing conditions, the routing priority, the cutoff calendars, holiday calendars, the cost rules involved, the currency rules involved, the fallback logic, manual routing scenarios, etc. In short, the stage 5 basically converts a cleared payment into a payment with an assigned processing route. So after a route is selected, the payment must be converted into a format understood by the selected network or a receiving bank. And this is called your message creation. Banks normally hold payment information in their own internal data, structure. However, external networks require standardized message formats. So in this particular stage, the input is a routed payment instruction. At this point, the system knows where the payment needs to go and which message standard must be used. So action, the internal payment information is mapped into network specific message. For example, it could be your ISO 20022 MX message, such as PAX.008, PAIN.001. It could be a Swift MT message, such as MT103, MT101, MT202. It could be a domestic clearing message. It could be a network specific API request, and so on. And the output is a send ready payment message. send ready payment. So if the message to be sent um, is in ISO format, the output should basically be ready in a XML MX format. In short, stage 6 basically converts the routed internal instruction into a standard message that the external network or receiving institution can understand. Okay, now the seventh stage is clearing or transmission. So this is the point at which the payment instruction leaves the originating bank's internal environment and is sent to another institution or payment infrastructure. From this point, from stage 7, and the input for this particular stage is send ready payment message created in the previous stage. And what actions are performed? The message may be transmitted to a clearinghouse. It could be transmitted to RTGS system, SCH, Swift network, a correspondent bank, a payment gateway, another bank, or market infrastructure. And once the payment leaves the bank and receives a technical response or acknowledgement. So this is the output for this particular stage. In short, stage 7, where clearing or transmission happens, stage 7 basically converts a send ready message into an externally transmitted payment instruction. The eighth stage is the settlement. So settlement is one of the most important concepts in payments. Sending a message does not itself mean that money has been settled between the banks, between the parties, between the financial institutions. Settlement is the process through which the financial obligation between the participating banks or financial institutions is discharged. So when I say word discharge, it means that the amount owed by one bank to another has been paid or formally completed. In this particular case, the input is a clear payment obligation. So an interbank obligation is the amount one bank owes another because of customer payment. What actions are performed? Funds are moved or settlement positions are updated using central bank accounts, correspondent bank accounts, designated settlement accounts, clearing system settlement arrangements, and so on. Let me just give you an example. Suppose a customer of bank A sends 10,000 to a customer of bank B. So at settlement, bank A's settlement position may be debited and bank B's settlement position may be credited. After that, the obligation between two banks has been settled. In this particular stage, the BA should understand the settlement method, the settlement timing, account configuration, liquidity requirements, whether it's a gross or net processing, failure handling or exception handling, retry rules, and the suspense account treatment. Okay, when I say suspense account is basically a temporary accounting account used by the banks when the correct final treatment is not yet known. In short, stage 8 or the settlement stage converts the cleared payment obligation into a settled interbank obligation. So after the processing or settlement is done, the bank must update its internal accounting records, and that stage is called the posting. Posting basically means updating, and the input in this particular stage is the settlement or the process result. And what actions are performed? The bank creates debit and credit entries in their internal books. A ledger is an accounting record containing financial entries. A debit and credit are the two sides of an accounting entry. So their effect depends on the type of account being updated. The payment may affect customer account, bank GL account, fee account, nostro account, vostro account, settlement account, suspense account, office account, and so on. Okay, let me just give you a quick discussion on a general ledger. So general ledger, when you hear general ledger, it's a bank's main accounting record. Actually, it contains the entries representing the assets, liabilities, income, expense, fees, refunds, settlement position, and so on. Let me also tell you about the nostro and vostro account. I have actually explained this two concepts in my other videos as well. However, let me just quickly give you a glimpse of it. So a nostro account means our account with another bank. Let me just give an example. Suppose an Indian bank, suppose SBI, holds a US dollar account with JP Morgan in United States, US. So from the SBI's point of view, that US dollar account is a nostro account. And from the JP Morgan's point of view, it will refer to as the SBI escrow account. So it's just a difference in the perspective actually. Um, and in stage 9, it ensures that the bank's internal books accurately reflect the payment. The 10th stage is confirmation or sending status, communicating the status of the payment. The customers and internal users need to know what is happening to the payment. The input is the processing status, latest processing status. And what action is performed? The bank communicates the status to the customer through the mobile or internet banking channel, to the branch, operation team, corporate systems, upstream systems, other internal applications, right? So it will basically communicate with statuses like received, accepted, pending, under review, rejected, and so on. Let me just give you a simple example. Once the payment is completed, the mobile application may show payment successful. If there is any issues in between, it may show payment pending due to compliance review. So basically, it may pass the status through mobile application status, email, SMS, so operation dashboard and so on. In this particular stage, the BA basically be concerned about the status codes, the status descriptions, status sequence, customer facing messages, internal messages, and so on. Stage 10 basically converts a technical processing status into a understandable information for customer and other stakeholders. The 11th stage is the reconciliation stage. So reconciliation means comparing records from different systems to confirm that they represent the same transaction and that the amounts and the status agree. A payment may create records in the customer account system, in the payment engine, in the GL accounts, in the GL system, in the clearing system, in the settlement system, SWIFT system, Nostro statement, reporting system. So all these records, whatever it is created, must be in sync. They must match with each other. So in this test, the input basically includes the internal books and the external reports. External records may include your clearing files, network confirmation, settlement reports, bank statements, Nostro statements, right? And what actions are performed? Basically, the bank compares the records using matching information such as your payment difference, message ID, amount, currency, value date, account, end-to-end difference, etc. Let me give you a simple example. Suppose the bank's payment ledger shows that 10,000 rupees was sent. The bank then checks the relevant external confirmation or statement line to verify that the same 10,000 rupees transaction was processed and settled. If the records agree, the item is marked as matched. If they do not agree, the item becomes a reconciliation break. Now, what is reconciliation break? So, reconciliation break is nothing but a difference or mismatch between records. Output of this particular stage is the items are classified as either matched, unmatched, or kept under investigation. So in this particular stage, you should be defining, the matching keys, the matching response, the break categories, edging rules, ownerships, reconciliation dashboard, and so on. Basically, stage 11 or reconciliation confirms whether internal accounting records and external payment records are consistent and matched or not. The 12th stage is the exception and investigation. So exception is basically a payment that could not complete the normal processing path. For example, your rejected payment, compliance hold, failed transaction, settlement failures, reconciliation mismatch, duplicate payments, delayed payments. So all this could basically fall under the exceptions and be sent for investigation. The input for this particular stage may be a reject, a hold, a mismatch, a system failure, a customer complaint. So as a part of action, the bank investigates the issue and determines the correct action. So this may include analyzing the root cause, correcting the payment data, requesting additional information from the customer, retrying the payment, returning funds to the sender's account, reversing an accounting entry, cancelling the payment, escalating the case, and so on. So in this particular stage, you should define the exception categories, the case status, ownership, retry rules, regulatory timelines, return and cancellation processes, the repair permissions, audit requirements, and so on. Therefore, stage 12 converts a failed, held, rejected, or mismatched payment into a documented and resolved exception. So we have covered all the 12 stages in the payment end-to-end lifecycle. And with this, we come to the end of our foundation level walkthrough of the topic. I hope you could actually understand the concept and would be able to apply in your day-to-day project work or in your learning journey. Thank you for watching. And for more practical and beginner-friendly videos on payments, banking technology, please do subscribe to my channel. I will see you in the next video. Bye.